You log into Wadsworth with your starting cash, ready to build an empire. But almost immediately, you are confronted by endless supply chains, flashing market tickers, and a massive list of different factories you could build. The sheer volume of choices is completely overwhelming. The traditional path in this game involves trying to guess exactly which factory to construct, or which single player's company is going to succeed. You spend hours trying to pick the one perfect winner. That approach carries a massive amount of risk. If you guess wrong, or if the market price for the single item you produce suddenly drops, your entire operation can go bankrupt. But there is a much less stressful alternative. What if you could step back from the factory floor, ignore individual companies, and place a safe, steady bet on the growth of the entire game economy instead? Mastering Wadsworth does not require you to work harder at micromanaging supply lines. It is about learning to read the high-level dashboard and letting the system do the heavy lifting for you. To understand the economy, we first need to look at indices. Think of an index as a daily weather report for the market. Instead of telling you the temperature outside, it tells you the temperature of the financial system. Raw data points form a thermometer representing the WBC 50, measuring the top 50 companies. Blue is cooling, red is heating up. It splits into a map, the Land Valuation Index, tracking real estate. Finally, it becomes a speedometer, the Greed and Fear Index, tracking player psychology. There is one mechanical rule you need to remember. You cannot actually buy an index. You can only read it to gather information for your next move. By checking these weather reports, you avoid making blind investments when the economic conditions are turning hostile. Once you know the economic weather is good, you might want to invest in the top 50 companies we mentioned earlier. But manually buying shares of 50 different individual stocks is exhausting and expensive. That is where the exchange-traded fund, or ETF, comes in. An ETF is simply a pre-made basket that automatically holds a wide variety of assets for you. Instead of buying 50 pieces, you pay one price for an ETF share, gaining fractional ownership of everything inside. If one asset inside the basket crumbles away, the overall cube remains stable. The surviving companies easily prop up the few that struggle. ETFs remove the dangerous gamble of picking individual winners. With a single click, you safely buy a piece of the entire broad market. This basket system works for physical goods. To profit from agriculture, manual hoarding of items would quickly bury you in logistics and inventory limits. The Apple Seeds ETF solves this. Automated bankers in the game hold the actual physical seeds in massive vaults, while you simply hold a digital share. You get all the profit of rising seed prices without ever touching a crate. You can do the same for real estate with the City NAV ETF. NAV stands for Net Asset Value, which means the fund tracks the total market worth of every piece of land it owns. You profit from rising land values across the world without ever paying taxes on a single plot. Even the industrial power grid is accessible. The Energy ETF owns massive reserves of power, buying up energy when it is cheap and selling it back when the grid is struggling. This constant trading helps stabilize the entire power system while providing you a clean slice of the sector's profits. These asset-backed funds turn the headache of physical logistics into clean digital wealth, allowing you to bypass your inventory limits entirely. The ultimate goal of this strategy is to generate reliable passive income while you are completely away from your keyboard. Dividends make passive income possible. These automatic payouts reward you for holding an ETF's basket. As internal assets perform well and the fund earns revenue, you get a slice of that profit. It flows straight into your account every week. Higher performance means higher payouts. These steady dividends finally replace the daily grind of factory management with a permanent hands-off income stream. To put this into practice, start by looking at your dashboard. Check the Greed and Fear Index to make sure the market mood is calm and stable. Next, open the brokerage firm menu. Look through the list of available ETFs and review their current share prices. Finally, execute your very first trade. Buy just a single share of the WBC 50 index fund. With that one simple trade, you have officially stepped off the chaotic factory floor. You are now on your way to effortless, automated wealth.